So you want to get started investing your money, but you don't know where to begin. There's tons of ways to invest your money, whether it be stocks, bonds, ETFs, cryptocurrency, rental properties, flipping properties, and honestly, lots more. So today we're going to talk about it, and I'm splitting this video into 3 parts. First being what even is investing, second, why I think that you should be getting invested in the stock market, and finally, how to actually get started investing your money. So with that, first, what even is investing? Put in the simplest terms, investing is putting some of your personal assets, in this instance, like your money, your hard-earned cash, into something else, like for example, a house, the stock market, etc., with the ultimate goal of that money essentially generating profit, building you sources of income, or maybe just overall building your net worth. As I mentioned just a moment ago, there's tons of different ways to invest your money, whether it be through purchasing a real estate property and then renting it out to renters to therefore generate you, passive income, or you could also buy real estate to then renovate it, provide updates to the house, ultimately called flipping, and then trying to sell it at a profit, or putting your money into the stock market and watching it grow over time. It's important to note that every type of investment does include some type of risk, so it's super important to do your research and kind of figure out what type of investment you are most comfortable with. Some people might honestly be scared to invest in the stock market because they're scared that they're going to put their money in and then all of a sudden it's going to be a bear market, also known as the market just going down, declining, and therefore they feel a little bit more comfortable doing things like investing in real estate. But honestly, real estate comes with its risks as well, such as you buy a property with the expectation of renting it out to tenants and then you can't find any tenants, or maybe you buy a real estate property that you intend on renovating, improving, and reselling it for a profit, and then you can't find any buyers for your property and you end up having to mark it down and you end up not even making a profit. So the point is that all types of investments do have risks, and you really just have to figure out what type of investment risk are you most comfortable with. But this video is not about investing in real estate property, investing in rental properties. This video is about investing in the stock market. So if that's something that you're interested in, then make sure you keep watching this video. All right, next let's talk about why you should be investing your money in the stock market. And actually there's tons of different reasons why the stock market is a really good investment. So let's just talk about a few of my personal favorite reasons. First and foremost, and my personal favorite reason, is that it helps you build wealth. Over the long term, the stock market has historically been one of the best ways to build a large net worth. Look at people like Warren Buffett, for example. By investing in stocks, you have the opportunity to see your money grow as the value of your investments grow with it. I'll dive into this a little bit more in a second, but just know that investing in the stock market is one of the best ways to build wealth, not only for yourself, but generational wealth for your family and your kids beyond. And you might be wondering, why not just put your money into a savings account? Well, there's this little thing called inflation. So this is reason number 2 that I think investing in the stock market is awesome. Investing in the stock market actually helps you beat inflation, if that makes sense. Inflation is essentially the gradual increase in the price of goods over time, which ultimately leads to decreased purchasing power of your money if it's just sitting and staying the same. By investing in the stock market, you can actually outpace inflation, which allows your money to not only maintain its value, but potentially increase its value as well. So if you're just putting your money into savings, there's the potential that your money is actually not growing at the same rate of inflation and therefore becoming worth less over time. The next reason I really like investing in the stock market is because there's a ton of different ways to kind of diversify your money within the stock market. We'll dive into this a little bit more in a second, but there's things from investing in individual companies that you believe in. There's things from investing in like real estate as a sector. There's things like investing in index funds, which would basically be like a conglomerate of, the best companies in the US, all the way to things like mutual funds. So there's lots of different ways that you can invest your money, and I love that it can be different sectors, different types of companies, and it makes me feel like my money is actually a lot more diversified by being invested in all sorts of different things. Another reason I love investing is because you can actually start making passive income from it. So you can do this in a few different ways, but one of my personal favorites is through investing in stocks that have high yield dividends. Some stocks actually do pay dividends, which is essentially a share of a company's profits distributed to shareholders. So by purchasing stocks of companies that pay out these dividends, you're actually generating dividend income every single month or quarter, kind of depending on how often it's paid out. But like I said, this could be a whole video on its own, so let me know if you'd be interested in this video as a separate topic. Another reason that the stock market is amazing is because of this beautiful little thing called compound interest. Basically, compound interest is interest you earn on top of interest, and that's why your money in the stock market can really snowball over time. So let's just do some very, very simple math to demonstrate this. Basically, let's say you have $100 and it earns 5% interest in a year. At the end of that year, you'll have $105. Now, in your second year, you're earning 5% interest on that $105, which means in the second year, instead of making $5 on your $100, you're making $5.25 on your $105. Does that make sense? Hopefully that makes sense. Basically, the point is you're earning more and more money off the same exact interest rate, and it's continuing and continuing to snowball your money over time. Now, imagine if you scaled that with either a lot more money, invested every single month or year, or letting it sit for 20, 30 years at a time. For example, if you invest just $400 a month into the S&P 500, which is an index fund of the top 500 companies in the US, this index fund has an average yearly return of about 11%. So at the end of 30 years, investing $400 a month into the S&P 500, you would have a little over $1.1 million. Now, if you just put that $400 per month into a basic savings account, you would have more like $144,000, which is kind of a crazy big difference amount of money if you look at it in the scale of long term. So basically the point is here that the longer you stay invested, the more you can benefit from this compounding effect. And this is truly one of the best reasons why investing your money in the stock market can help you build such a big nest egg, build you a lot of wealth in general, and ultimately help you become a millionaire. And the last reason I personally love investing in the stock market is because it helps you build financial freedom. I talked about this in my 7 Money Habits video, but personally, financial freedom is something that I am working on achieving every single day. With an investment portfolio that is diverse and that you're putting into every single month, you can truly get it to a point where your stock account is generating enough income to cover your expenses, whether that be through dividend investing or even just the interest you're making every single month on your portfolio. So those are just a few reasons why I think investing in the stock market is awesome. I love it so much. But now let's talk about how to actually get started doing this. So the first and easiest way to get invested in the stock market is actually through your company's 401k program. If you are a traditional W-2 full-time employee, you should have access to a 401k. I think pretty much every company offers this these days, unless you're at like maybe a really small tech startup or something like that. But if you don't know, just real quick, here's what a 401k is. Basically, a 401k is an employer-sourced retirement savings plan that offers you significant tax benefits. Basically, the way that it works is you will set a certain percentage of your pre-taxed income paycheck that will go into your 401k. And a lot of companies actually will match up to a certain percentage into the 401k, which is amazing because that is free money, extra free money from your employer. This should be happening automatically, and you can always check your pay stub to see how much you're already putting into your 401k, or you can reach out to your HR person if you aren't sure if you've even signed up for a 401k program or if you need to get signed up for it. I highly recommend maxing out your 401k as well as whatever your employer is matching, just to maximize these savings, because again, it is pre-taxed money. However, of course, there's a catch with any sort of government, 401k tax savings type of program. So the main catch here is that you actually can't touch this money until you're about 59 and a half years old. Although I do think that you can withdraw from it earlier at a penalty, so that's a whole other thing. But just know that basically, in order to put the money away tax-free and remove it tax-free, you do have to wait until you are 59 and a half years old. But this is the easiest way to get started investing in the stock market. All of these 401k programs have things like stocks and bonds that they're investing into. And if you are a full-time W-2 employee, you should absolutely be putting money into a 401k program. But not everyone is a W-2 full-time employee, like me, for example. So there's this cool thing called a Roth IRA. A Roth IRA is really similar to a 401k program. However, it is post-tax money. So this could also be for somebody who is putting money into their 401k, but they also want to be putting additional money into the stock market because they know, there's so many benefits to it, but they also don't really know like exactly where to be investing or like what index funds. They don't really want to like do the work themselves. So you can put your money into basically the similar type of thing as a 401k, but it's like separate from your employer and it's post-tax paycheck money that goes into your Roth IRA. However, this also does have a couple of catches. So same type of situation with withdrawing money. If you want to withdraw it tax-free, you do have to wait until you are 59 and a half years old as well, same as the 401k program. There's also a maximum amount that you can put in it per year. I believe for 2023, it was like $6,500 per year that you could put into it. So, you can't put in $10,000 a year if you were hoping to do that, unfortunately. And the other main restriction here, and this is where it becomes a little tricky, is there's actually an income threshold. This was what it was for 2023 and it may change for 2024, but if you are an individual and you make more than $138,000 per year, you actually can't contribute the full amount to a Roth IRA. And then I believe over like 159K, you can't contribute at all. it's just not allowed. And then there's also a requirement for a household. The threshold is a little bit higher. It's $218,000 for a household if you're filing jointly. Basically, my point is that if you make more money than that, then this option is really not a good one for you, but definitely something to consider if you want to be investing in the stock market. You make less than those figures mentioned, and you don't want to think too much about, you know, how to get invested, and you also don't mind waiting until you're 59 and a half years old to access it. If you do want to get invested in a Roth IRA, that is not the topic of this video, but I do recommend, you know, doing a bunch more research on it because it is a really great option for people. You can go to websites like Charles Schwab, Vanguard, or Fidelity to get started, learn more about it, and open a Roth IRA account. But let's say that you make more than those income requirements and you still want to be investing additional income into the stock market. Or let's say you want to be able to withdraw money whenever you want. Or maybe you've done a 401k, a Roth IRA, and you just love having your money in the stock market so much that you want to do it yourself too. Or maybe you just have a fun interest in dividend investing, you want to have control over your money, or you just think it's fun. Then you can start investing your post-tax money into the stock market by yourself independently into things like stocks, bonds, and ETFs. So let's talk about that now. First of all, I actually do use Robinhood for my investment portfolio, and I do actually have a referral link with Robinhood. So if you're looking into getting signed up for a brokerage and starting to invest in the stock market, you can use the link down in my description box to sign up for Robinhood. You'll actually get a reward. It could be anywhere from $5 to $200, and you can use that money to go ahead and get started investing. So that's pretty cool because it's free money. And I also get a reward if you use my link as well. So I do greatly appreciate it if anybody does end up using my referral link to Robinhood. I do like Robinhood because it's free to actually buy stocks, and like there's no fees associated with it. Some other brokerages, there are fees. And I also think Robinhood is super user-friendly, so I do recommend using it. But once you've gone ahead and created your account, signed up for Robinhood, you now need to figure out what stocks you want to buy. So one way to go about doing this is by purchasing stocks of individual companies. Companies like Apple, Google, Microsoft, Lululemon, Starbucks, you name it. If it's a publicly traded company, you can buy it on Robinhood. If you do choose to invest in individual companies, here's my 2 cents, take it or leave it. I think it's smart to buy companies that you know and use, that you believe in, that you see performing well in the long term. Think about the company's potential, think about how often you use that company, and think about the potential growth or stability over time. For example, you may have heard of this little company called Starbucks. We all know Starbucks. However, maybe you're more of an Nespresso girly. You don't really go to Starbucks and every morning you make your little Nespresso and that's your thing. Well, I don't know if you knew this, but Nespresso is actually owned by Nestle. You can buy shares of Nestle stock. So maybe instead of supporting Starbucks because you don't really even use that company, maybe you actually support something that does a little bit more, does a lot more by having things like Nespresso or other things like that that you actually use and believe in. So you can kind of start looking into different companies that you know and use on a daily basis. Like I said, anywhere from a Starbucks to a Lululemon, Nike, to things like Google, Microsoft, Apple, etc. But also know that investing in individual companies, like I said at the beginning of this video, does come with a little bit of risk. For example, while Lululemon is my absolute favorite athleisure wear to buy, who's to say that one day there's not going to be another company that makes newer, better leggings that everyone stops buying Lululemon and starts buying this new brand, you know? So you never really know like what could happen with a company. Maybe something happens with the CEO and all of a sudden the whole company tanks and goes under. You really just never know what could happen. So investing in individual companies does come with a little bit of risk in that aspect. However, they also could grow really fast. You know, Lululemon could all of a sudden get into some new sector and have its stock price triple. So that's definitely some pros and cons to investing in individual companies and something to think about. If you're not sure what individual companies to invest in, then you can always invest in index funds. So first of all, what even are index funds? An index fund is essentially a portfolio of stocks or bonds that are designed to mimic the overall kind of stock market. Typically, index funds have lower expenses. It's easier to buy into them. They also can allow a really passive investment strategy, meaning you don't really have to like do a ton of research on a bunch of different companies and decide what companies to buy. Instead, you can just kind of put money into an index fund and you'll buy like a conglomerate or a mix of a bunch of different companies. And really the main point of an index fund is that it's trying to match the market overall based on the theory that a long-term investment in the greater stock market will outperform any one individual company. So for example, the S&P 500 is a really common one. I referenced it earlier in this video, and it's basically tracking the performance of the top 500 companies in the US. So in theory, for example, if the 500th company on the list starts to decline in revenue and the 501st company on the list starts to improve their revenue, in theory they would just switch. So that's why it can be considered to be a better investment to invest in some of these like index funds, because you don't have to worry about an individual company, you know, tanking or performing really well. So in order to actually buy an index fund, you need to buy what's called an ETF, which stands for an exchange traded fund. And it's basically just the way that you actually purchase these index funds. So what's really cool is that on Robinhood, you can just scroll down and click this little button here that says ETFs. And it's actually pretty cool because then it takes you to this page that shows you different ETF sectors. So for example, if you really want to invest in a commodity ETF, you can basically be investing in index funds that are companies that are based around like wheat, oil, livestock, grain, etc. Or there's other things like real estate ETFs, but the things that I'm talking about here are the S&P 500. So you just want to click index ETF and you can find a whole list of all the index ETFs here. I personally have a lot of my money invested in QQQ, which is the Nasdaq's equivalent of the S&P 500 or SPY, and really similar to the S&P 500, it's actually just focused on the top 100 companies. So the reason I personally like investing in this is it has shown a slightly higher percentage growth rate over an extended period of time. But again, it really just depends on your willingness and your risk appetite. Now, I feel like this video is already pretty long, so I do apologize, but I wanted to just show you really quick how to kind of get started on Robinhood. So again, once you've created an account by clicking that link down in my description box, you're going to want to transfer your hard-earned cash into the account. So you'll just click account and transfers and select basically how much money you want to transfer into your Robinhood account. Once you've done that, you'll see what's called buying power, and that means that's how much money you have in your account to actually go ahead and purchase stocks. So now all you need to do is search for the company or the ETF that you want to purchase. You could just type it right into the little search bar. You can type SPY for the S&P 500 that we've been talking about, or if you want to buy Apple or whatever, you can type that into the search. And then over on the right hand side, you'll click this box in here that says buy shares. You'll type in the dollar amount that you want to buy and press submit. And bada bing, bada boom, you are invested in the stock market. But honestly, that's pretty much it. All you want to keep doing is do this every single month. You can actually set up on Robinhood recurring investments so that every single month money is going in. It's going into the S&P 500 if you want. It's like super automated and become super passive that way. And that way you're able to just build your net worth over time. It really doesn't have to be complicated. I know that investing in the stock market can sound really scary, especially as a woman. I was really intimidated by it, and I'm grateful that my husband actually taught me a lot about the stock market. But by taking these first steps, you're really just setting yourself up for a healthy, wealthy future. Well, you guys, I know that this video was a little bit on the longer side, but I hope that you did find it useful. I did have quite a few people asking me in my comments to make a video about how to get started investing, so I hope that this video was informational, educational, and it helped you out in some way. Remember that if you want to set yourself up for a wealthy future to retire early and be financially free, investing in the stock market is just one of the many ways to do that. So do your research and make sure you're making a decision that's good for you. If you did enjoy this video, you found it useful, educational, or you want more tips on investing, maybe a more intermediate guide to Robinhood and how to think about different stocks and stuff, or even how to get started with dividend investing, make sure you let me know down in my comments box so I know that you guys are actually enjoying this type of video. And also make sure you hit that thumbs up button because it just helps me know what videos you guys like to see from me. Anyways, I think that's all I wanted to share with you guys today. So I really hope that you enjoyed this video and you found it useful, and I will catch up with you next time.